There's a lot, Andrew, going on right now in the economy, in the world. I think there's a lot of things that are on people's mind. Let's talk, though, about first the Fed meeting, the recent Fed meeting, interest rates. Where are you seeing that? Were you surprised by the decision? What are some of the things we're talking about?
Yeah, I don't think there was any real surprise from yesterday's Fed meeting. Yeah. And to be honest with you, I think that there's challenges in making decisions in this extremely volatile environment.
Agreed.
The other thing that I think is a little bit unique about the Powell and the Fed meeting and what they're going through is, first of all, giving them the benefit of the doubt that, we've had unprecedented tariff environment, we've had unique geopolitical environment. The challenge with that, I think, is a lot of the things that they're looking at, or that they have, let's call it prognosticated, have not come true, right? There was a talk of recession coming, right? That hasn't come true in the market thus far. There was a talk of inflation not easing. If you go all the way back to the beginning, inflation was supposed to be transitory.
Right.
They got that incorrect. Fast forward, inflation was much higher than ever anticipated. And now, as inflation is by all reports coming down and easing, they're now predicting inflation coming back because of the potential tariffs. I think the other thing that's really unique about the data that they're reporting is the Atlanta Fed has had two readings back to back on GDP of 3+%. And yet the Fed is forecasting 1.5 to maybe 1.3% GDP for the year. Right. So think about if we're this far through the year and the GDP from the Atlanta Fed has been, call it 3+, closer to 4, and they're saying it's going to be around 1.3 to 1.4 for the year. That's a pretty dramatic second half of the year.
Very much so.
Yeah, that you'd have to have some real negatives to hit that number. So I think there's so much noise in the data right now that it's really hard for them to predict anything. So let's take the facts. The market is probably pricing in somewhere around 1 to 2 cuts for the remainder of the year. The likelihood that it happens at the next meeting is probably not good, and then they do take a meeting off for the summer. So we're looking at the second half of the year. But also with that, the market, the underlying, and I'm not referring to the stock market, but the underlying fundamentals have continued to be strong.
Very strong. But you've seen that. You've seen that reflected.
You're seeing it reflected in everything that's happening, right? And so each month the reports come out and the data that we're looking at. I mean, there was thoughts that the consumer spending was gonna topple. There were thoughts that saving rates were gonna come down, that delinquencies were gonna skyrocket. I think Bank of America just released a report that their delinquencies actually came down, right? So everything that we're looking at and that the Fed has continued to kind of forward project really hasn't been true. Now, again, going back to giving them the benefit of the doubt, I think it's a really unique time. I think the more important aspect to be considered right now is this geopolitical environment.
100%.
And it's unpredictable. It's really hard to be able to understand what the outcome is going to be. And that's why, as you think about Prevail and what we do in our market and the way that we invest is using volatility as an asset class.
Right.
Having non-correlated assets so you're not beholden to what's going on in the market. And we've built the portfolios to be very nimble. As we saw the volatility coming, we went risk off. When we hit some real low points, we went some risk back on, and it's proven to be really good. I don't know how much weight right now is being given to the Fed, given the fact that yesterday the markets were a little bit higher. He spoke, they came down, but there's not been a major reaction the last couple of times.
And I think to your point, I think a lot of it was already priced in.
Yeah,
I think this was priced in, and so it'll be an interesting second half of the year. I think Prevail is well positioned to handle that. I'm really proud of our team and how we've navigated some of these challenges, and it's been a difficult time to manage money this year. But proud of the team. And to your point, the diversification, this is really where things start to get volatile, which we do use as an advantage, but also having assets in other non-correlated places here,
absolutely,
I think is a huge advantage, and really emotionally can put people more at ease and feeling like they're in more control.
Absolutely.